Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Brien Lundin. We're going to be doing a quick little overview on what's happening in the precious metals sector and also driving down into some of the bigger stories within the equities. First things first, Brien, is that when we look at the move in gold, look, it continues to be strong, hanging around that 2,500 level. Silver had been underperforming, but it's playing a little bit of catch up today. More importantly, though, we're seeing inflows into GLD. This has been one of the missing steps, kind of that Western demand supporting price and moving that higher. Still not really seeing any inflows into GDX to any significant degree, but again, investors seem to be a bit more focused simply on the metal and playing that through some of the ETFs. Brien, what have you noticed in terms of GLD? Some of the inflows there and seemingly the Western investor starting to get involved.
Yeah, this has been a weird gold bull market in that the early stages of it were fueled by central bank investment and Chinese investors and savers domestically. It was unusual because, central bank buying is somewhat price insensitive, so that was great. Chinese investors usually are very price sensitive and buying declines, but they actually chased the price higher for the first time ever that we saw that. But we did not see in those early stages really any significant Western investment in the sector. Now we're starting to see that. We're starting to finally see flows into GLD, at least, the physical gold ETFs, paper gold ETFs rather. And that's starting to turn. Why is it turning? Because the Western investors didn't really understand what was motivating the central banks, which they were trying to get out from under the dollar hegemony and insulate them from dollar weaponization. But that didn't have any relevance to Western investors. Now, however, they're starting to price in the Fed pivot, which has all been announced for September. So that's happening as we speak. Now we're getting Western investors coming into the market. Now, there's really no reason to think that central banks are going to suddenly stop buying gold. Their pace so far this year is actually a new record-setting pace, exceeding 2022. So there's no reason that they're going to stop. There's no reason that Chinese domestic investors are going to stop. So this may actually be the first time in the history of gold as an investable asset, i.e. since 1971, that we've seen both the West and the East buying gold at the same time. The result, I think, could be explosive for the gold price, and I think that's directly related to why we've seen gold be so resilient lately. It's been rising regardless of what Treasury yields have been doing. It's been rising regardless of what the dollar index has been doing. As we speak, gold was down yesterday on a weaker dollar and falling Treasury yields. Today, it's up on a stronger dollar and stronger Treasury yields. So it's been really disconnected from some of those kind of traditional factors. So the bottom line, I think, is that gold wants to go higher. I think everybody across the world is buying gold for somewhat different reasons, but generally because they see that fiat currencies are going to continue to lose their value and at an accelerating rate over the future years, and they want to lock in their purchasing power by owning gold now.
Yeah, Brien, I think it's a great point because it's not just a U.S. phenomenon, it's a global phenomenon that inflation is still eroding the purchasing power of fiat currencies. And that's what inflation is. And your dollar or your yen or your euro is buying less goods than it used to because of the inflation of the money supply. And so I think the global investor has woken up to gold as the safe haven, and that's why it's been so resilient. But now that Western buyers are coming into GLD and they have been purchasing in the physical markets, do you think that finally translates down into the gold stocks? Because when we look at something like GDX or GDXJ, the volumes are still low. Granted, they've had a little bit of life over the last, let's say, 6 months or so, but there doesn't seem to be that big wave of investing demand hitting the gold equities. How are you looking at them in relation to gold?
Yeah, I think it's starting, though. was watching CNBC on Monday, and for the first time, I saw one of their panels really mention gold and gold stocks and the free cash flows that the major miners are starting to spin out. And we started to see periodically some big reactions in those stocks. So I think that's starting. It will be a while before it really gets, at least a little while before it really gains momentum in the big majors and then starts to filter down the food chain toward the juniors and the junior developers and at some point the exploration stocks. But we are starting to see M&A pick up a bit. Some of the larger companies, as we saw for Cisco, some of those are starting to get bought up and at decent premiums now.
Brien, how important is that M&A aspect? We've discussed numerous times in the last few months all the M&A that's happened. Sometimes people complain about the M&A. They say it's a take under. We've argued, though, that, hey, at least it frees up capital, it moves money around in the sector, and it can provide some more interest for investors, again, looking for that premium. What do you look for when you see any of these M&A deals that show you that, hey, maybe it is going to bring in more interest? Maybe this will attract more investors.
Yeah, if you look at the deals, you want deals that would move the needle for a big or mid-level, mid-tier producer. And there's a bunch of them out there, and they're trading at levels that are as little as a quarter or even less of what they would be trading for if they were valued in just a moderate market, a normal market, much less something that's really exciting and a rollicking bull market environment. So those kinds of companies actually offer exploration level potential, discovery play potential at their current valuations with less downside because they've already found something. So there are a number of plays out there. And another thing that's interesting is that we're essentially at $2,500 gold here, at least the futures price. And that changes everything in the market. I don't think investors have yet begun to reprice these equities according to the market environment that we're in. I think people are missing the fact that this changes everything. A lot of those long-time optionality plays that are out of the money resources have suddenly become in the money and in a big way and in fact achievable. So this price really changes everything.
Yeah, Brien, it sure does. The producers are actually making money here and they're seeing their margins expand, but also the balance sheet improve, and they're paying down debt or they're building up cash that could be used for more M&A. And then the economics on the development stage projects, whether they're held under producer or just a single asset developer, are going to be looking a lot better the higher the gold prices creep up compared to where some of the studies were done years ago. Even despite the inflation increase, the metals price increase is now outpacing the inflation. But we've also seen M&A deals, and I'll just highlight Filo Mining when it was taken over by both Lundin Mining that was already in there and BHP, where they're teaming up together. And we were just noting in the past, there were some nice partnerships where two companies work together. Do you think we need to see more of that, more cooperation between two mid-tiers or two majors working together to develop these larger projects?
Yeah, I think we will. And in some cases, we'll even see the juniors maintain a carried interest in the projects. And you'll need to do that in some cases to develop some of these really large projects. But it's a different world now in a lot of ways, some ways good, some ways bad. One of the good ways is that the CapEx numbers for some of these big projects might be daunting in the junior mine or in the mining industry. You know, $1 billion is a big ticket number in the mining industry at any level. But in the outside world, in the tech world, in the OEM world, it's not that big of a number. And we're starting to see OEM investments to secure, particularly in battery metals, to secure supplies. It becomes strategic in that level. So that's the possibility that some of these projects will bring together strange bedfellows, and that it will include not just miners, in some cases no miners, but include other industries and other investors.
Brent, how important is it for these stocks, ones that maybe you're looking at investing or even following along with, to have already a big company involved in it or a big money investor. Circling back to that Philo deal, right? Lundin, it already was a Lundin company, so sometimes having this big money does actually spur that M&A, but also helps fund these projects.
Yeah, it does help. And we've seen some of these mining companies, well, we've always seen these mining companies take equity positions in some of the juniors, and that gives them a foothold. So that helps and hurts. It helps the juniors because they get that financing that really helps. They get that validation by a major that this is a reasonable project and a technically sound project. It hurts in some cases in that major that has that essential, that early equity investment, whether it's 9.9 or 19.9, they become the natural buyer, and it kind of dampens the potential for a bidding war, at least a bit, depending on the situation. But I think my major point here is that this whole universe of companies and the M&A, potential M&A, is really changing right now with gold prices where they are. We have to stay at these levels for a while. You mentioned these economic studies at various gold prices. You can look at any pitch deck for a company where they show the project's price sensitivity. What does it do at lower gold prices? What does it do at higher gold prices? There is not a single one of them at the highest gold price projections that they felt credibly they could put on those tables. Not one of them even approaches $2,500. And they can't. At some point, the regulators are going to say you have to have some kind of basis in 3-year trailing prices. So they can't even show anything close to current prices, what their economics will be. That's how transformational, that's how quickly the gold price has accelerated. And those economics are off the charts for a lot of projects right now if we can maintain these prices. And frankly, I believe we're going much higher.
Well, Brien, I think it's such an interesting discussion on these economic reports and the sensitivities to higher metals prices, because we see this every time that there's a sea change in the sector. I remember when gold was stuck at 1100, 1200, 1300, and when it finally jumped up to the 15, 1600s, people were afraid to use those numbers because those were way too high of gold prices. 1600, and then the same thing happened when it approached 2000. Well, we got to be conservative. Let's keep using 1200 or 1300. But there's a point where at 2300, 2400, $2,500 gold, you got to start using base case assumptions higher than 1250 or 1400 or even 1500. We are in the 2000s now, and if we go even higher, there's a point where these things could just springboard up. Could this be, I guess, a re-rating catalyst where all of a sudden there's an aha moment or a light bulb that goes off in the sector and people say, holy cow, these projects aren't just economic, they're going to be money printing machines?
Yeah, the light bulb won't go off, and the experienced investors like you and I, we won't get really excited until the generalists get in here and really recognize this kind of value, until it becomes the thing, the next theme in the markets. And I think that's coming. And the potential of that kind of money coming into this small sector, when they realize the value that's been created, and the fact that these metals prices are not only much higher than anybody expected that they would be at this time, but that they're headed much higher still, I think we could get that mania ignited. But it's barely a smoldering ember right now. I think we're going to have a bonfire eventually, and the timing is always the tough part. But they can't ignore this kind of value. And again, we've talked many times about the macro issues that are really, I think, irresistible, that will push metals prices even higher than where we are today. So I think you just got to hold on and buy and hold and set it and forget it right now, because this is a generational opportunity we have right now.
Yeah, that disconnect between the stocks and the metals prices. I know we're all sitting there wondering, what is it going to take to bring in some of these generalists to re-rate the whole sector? Gold keeps breaking out, and some of these stocks are doing pretty well, but again, it hasn't been that sector-wide re-rating that we're all waiting for. Higher gold prices always help, and also getting some of these assets built and getting them in even stronger company hands, that also helps too. So it's a process out here, Brien, but the gold price is doing its part, and a lot of these companies are doing some good work. The juniors, though, still don't have a whole lot of cash to work with. Brien, again, is the editor of the Gold Newsletter and our host down at the New Orleans Investment Conference happening this year, November 20th to 23rd. I'll post a link to that conference so you can find out more, and hopefully you can join us down in New Orleans. Brien, thank you very much for your time today. We'll chat again in a couple weeks.
Looking forward to it. Thank